Hello, welcome back to WinFS Trading YouTube channel, the only channel that has been optimized to make you rich trading the Forex synthetic market. For a couple of some days right now, some weeks, I haven't uploaded content of more than 1 minute. I look at what some traders are going through, especially in the areas of losses, and I make a deep research to find a way to come off those issues. That's why I launched this topic, Beginners Hidden Forex Trading Strategy. So the object of a discussion should be on swing point. So what is the meaning of swing point? How does it help you to make profits? I'm going to take you to charts to show you what swing points are. Okay, this is volatility 100 index. Let's be on the higher time frame so that we get the best result. So let's be on the H4. Okay, if we go back to the document, it says look for lower high for sell and higher low for buy. This is several things many traders have forgotten. They are not even trading with this ideology. So if you are not trading with this ideology, it means you have been losing a lot of money. There is one golden rule in the trading environment, which is buy low, sell high. You are not buying all the lows, you are not selling all the highs, but rather you are trading a particular swing point, which means you are selling a lower high and you are buying a higher low. Okay, now what is the proximity, what is the location of such swing point? That will bring us to the notion of signal significance. What is a signal significance? A signal significance is a point that have created a signal in the past, like this point have created a signal in the past. So it becomes a signal significance. Now, if we get a nearby price at, like if we have a price at near this swing, near here, okay, it will make that price a signal price. That price will be our entry for this, like for a signal whose direction will be equals to the significance signal. So we shall be selling near this lower high. So we shall be selling around this lower high. Okay, that is what it means to sell. To sell means to believe that the market will go down if price get to certain high and it should be a lower high. What is trying to tell you that you should be selling when the market is making lower highs, and you should be buying when the market is making higher lows. Now, with this idea, you cannot place your stop loss, because what you are actually trading is the previous significant point. We are trading this. So your stop loss should be above the next previous swing, and it should be what previous higher lower high. So you place your stop loss above this zone. That is when you trade profitably. Now, the biggest problem in this type of stuff is that it is hard to detect a valid significant signal. We use ultra-modern trading techniques, demand and supply, including demand and supply, market structure analysis, order blocks, Wyckoff criteria, volume spread analysis. We combine all of this to see a true significant signal, and we use it to generate the signal we present in our VIP. All VIP members, all VIP subscribers that are doing great. That's why we are unbeatable. Are you getting it? So, left for you to take decision. 2 ways to go. Enroll for our professional courses, WFS courses, or you can say, I'm tired of learning. I rather take on the advantage of done for you services, a kind of leverage, and then you become our VIP members and you make money in real time with no loss signals. But that is, by the way, I really need to push harder to go to the uptrend when the market is making uptrend, because the question here is, do you understand the market direction? Okay, you sell during the sequence of lower highs and you buy during the sequence of higher low. So let's try and check. We are using H4. Let's try in that H4. Can we get a market that is actually making higher lows? Okay, market that is making higher lows. There is a low point here. So most time, to determine a low and a high is biggest issue here. Okay, you should know that a low is the lowest point that changes price direction. The high is the highest point that changes price direction. But the length created, the length ratio, that is the ratio of the impulse, this is an impulse, and the retracement, is in such a way that the impulse is greater in length, right? So the swing point that creates a bigger length, the biggest length, is the type of swing point you should be looking for. Okay, yeah. So this is a low. But the funny thing is that there is no, this becomes a significant low point, but there is no nearer point here. Okay, you see, when this event happens here, this becomes a higher low with respect to this low. Okay, becomes a higher low with respect to this low. Okay, so this is a high. That high becomes a higher high with respect to this high. So the problem here is that most times you'll be waiting for a price to approach near a significant swing, but it couldn't happen. But if you keep monitoring the chart, you will get. Remember that here is a low point. This is a low point, low voltage. If it is in electrical field, for instance, price behave with potentials. So kind of, this is a low point. Okay, this is a low point. Now we have another price. We see price approaching this area. So if the difference between a significant point and a new point where price is at is not all that much, you can take it to be an entry point. Okay, so here we should have bought here. This point is nearer to here. There is no other one nearer. Okay, first of all, you have to make sure that a low is defined and it is accurate. A low should produce a higher, should produce a high. So since this low create this high that drop price here, we can take a buy here. Okay, when you take the buy here, this is now a higher low, so your stop loss will be below the previous higher low. Simple. That is the idea. And when you have done this, to be depending on your risk appetite, to be more safer, because there are equal points. Most time price will create equal potentials, equal point. In that case, you're actually trying to place, instead of placing your stop loss below the significant point, which is here, you place it about a historical significant swing point, like second order significant swing point. Most time it will not be visible in the time frame of analysis, but you can automatically do that using candlestick criteria. Since this is a swing, the significant swing point, then the historical or the second order swing point, like before this one, should be the low of this candle here. Okay, this candle, the low of this candle. So we can place the stop loss below this low of this candle. Okay, no matter how the price struggles, it can come here, then pick up. It will not trigger your stop loss. That is the idea. Okay, another event happened here. This is a low, very low voltage, very low potential. Okay, you need to allow a low to form a significant point for you to predict a signal about that low. So this low created. Okay, I told you the most difficult thing here is it is hard to technically predict the significant point. So I don't know how we explain this. You have to learn how to do it. This idea is contained in all our courses, because it's all about signal production. If you are not energized or eligible, like you don't have the energy to learn, why not take our signal and trade it in real time? That is another way to succeed, or an idea to make it here. Okay, so I don't know, I keep trying to explain along in this video. So this is a low point. Now we're actually waiting patiently for a nearest low, for a nearest price to this low. So this is it. This is one of it. There are a lot of ideas needed for you to actually say this is going to be it, because price can still drop down, even reach this low, break this low, and maybe coming to test this low, or coming to become a signal point near this low. All of that, there are a lot of complications here, but I try to present issues in a way that is going to be much more better and easier to understand. So here you are buying here. Instead of placing your stop loss below this one significance, you place it somewhere here. Are you getting it? So it's not a matter of a risky what, it's matter of making consistent profit. But your risk reward will improve anyway if you get a valid entry point. A valid entry point is an entry point that once you place that trade, it goes into profit immediately. It does not oscillate. Oscillating in profit and loss means that it has tendency to actually lose. So it depends on the validity of your entry point. Okay, you can see. I'll be ending this video. Um, keep learning, keep learning, keep learning. Share this video to your network that have been losing. All the forex traders in the synthetic market, like people that have been losing in synthetic market, you have to share this video to them. And those that are losing in forex market, you have to share this video to them. Synthetic and forex market are actually built in the same idea. So just that there is difference in volatility, and sometimes the volatility can create manipulations. So the issue here is to actually understand how to do this. And since this is gonna change a lot of your trading behavior, why not help other traders to come across the same idea by sharing this video to them? Keep doing well to keep overcoming the losses. Try to subscribe to our Telegram channel to get free signals, and also enroll for VIP if you are not making much profit in the free signal, because the free signals are not something someone give attention to learn. To synthesize, like to when in our VIP signal, it takes several time, patience, discipline, a lot of energy are being put. Monitoring is all about monitoring, compare and contrast until we get a valid signal point. Okay, so you can see the difference between VIP signals and free signals. VIP signals are 100% fixed in real time. Free signals are bias. You are taking those trades at your own risk. You make profit, yes, but one trade losing can wipe all the profit. But in VIP, one trade can generate massive profit that even if when you try to blow your account, you will not be able to blow your account. Imagine such situation that you are praying to blow your account, but it's not working because of the each profit you make is very massive. That his keyword is infinity. Okay, anyway, thank you. See you on the next content. Bye for now.